Literally everyone and their grandma is talking about AI data center infrastructure. And those stocks have gone up significantly in value. Where can you find actual value in the semiconductor industry right now? Stocks that may be a little bit cheaper than they should be.
Let's go back to our old standby here, the semiconductor industry flow. What area of the market has yet to really meaningfully take off? It did bottom out in 2025, but the uptick has been far from dramatic. Let's talk about the integrated device manufacturers, or the IDMs, and specifically those that participate in the auto, industrial, and power segment of the market. Casey, this has been an area where we and a lot of others here watching this video have suffered long waiting for a recovery. But Microchip actually just had some positive news a couple weeks ago.
Microchip actually announced that things are looking better than expected. Do we really think that this marks the bottom for realsies this time? I think so. Let's take a look at what they announced on January 5th. If you remember, let's go back in time. Back in November, Microchip said that we could expect about $1.13 billion in net sales in Q3 fiscal year 2026. That's the quarter that just ended that we're talking about right now. And then in December, they said, actually, you know what? We're going to be shooting for closer to the top end of that guidance, which was 1.149 or 1.15 billion. And now, well, how about that? This is what they released on January 5th. Microchip actually said it's going to be over that expectation, closer to $1.2 billion, almost a 5% increase in guidance from the midpoint of about $1.13 billion.
And Casey, I see you pulled the quote here from CEO Steve Sanghi, who retook the role of CEO at the tail end of 2024, when things were definitely not all right for Microchip and related company peers that also participate in this area of the industrial part of the semiconductor market. Basically, think of that like everything excluding accelerated computing and AI. But Mr. Singhi laid out a 9-point plan during the downturn, and they are back on the rise. Bookings activity is healthy again in the December 2025 quarter. That's the Q3 fiscal 2026. Typically, this is a quarter where there is some seasonal downturn for Microchip and companies that also compete with Microchip in this part of the market, but they actually have seen a nice steady activity quarter over quarter and sort of bucking the historical seasonality. That's good news that indeed we are back in a market recovery.
Now we're going to be taking a look at Microchip's historical revenues as well as that new guidance, along with a metric that we have followed during this auto and industrial downturn is the inventory. And a great way that we have used to track that is with Fiscal.ai. Fiscal has updated data points on the regular very quickly after any company reports any metric. And we use it every day here at Chip Stock Investor.
And here you have the updated guidance right here, highlighted on this chart from Fiscal.ai, showing the increased guide for the December 2025 quarter, Q3 fiscal year 2026. We're going to show you a series of other slides here from Fiscal.ai so you can get a feel for what they have to offer for serious investors that like to dig deep into the businesses they own or are considering owning.
Fiscal has also aggressively decreased their pricing, and you get an additional 15% off if you use our code Fiscal.ai/CSI, gets you that 15% off.
And let's dig a little bit more into these sales. You can see Microchip, even with the updated guidance for this most recent quarter, still nearly half of the sales they were reporting at the last cycle peak in mid-calendar year 2023. This has been a nasty downturn for a lot of these companies, but the upshot here, 4% quarter over quarter increase in sales, as well as a 15% increase year over year is implied, and a 22% increase from the bottom of the cycle, which it appears at this point was, in fact, March 2025. The quarter ended last March. So you may hear companies like Microchip and other peers talk about a hockey stick revenue recovery. That's where revenue really takes off in dramatic fashion. That has not happened here yet. Maybe it will, but as of this point, this is a much more gradual recovery. However, there's a lot more to the story than just looking at the sales. There are some other metrics that should go into your analysis of a cyclical business like this one that might be in the early innings of a recovery.
Yeah, one metric that we have pointed out a number of times with companies like this is their inventory. Inventories is in red. The blue bar is the inventory's percent change. This is one great visual that you have from fiscal. And you can see customers are buying again, increasing those bookings, and the inventory at Microchip is decreasing. In fact, it's the lowest it's been in a number of quarters. Now, of course, this was from the September 2025 quarter. We'll get an update on that very soon. But as a result of this, idle fabs can be turned on again, which could lead to that recovery that we've been looking for, especially in profit.
So no hockey stick recovery in revenue, but perhaps hockey stick recovery in earnings per share, especially on a GAAP basis, because those idle fabs have really weighed down Microchip's financials the last 2 years.
Microchip is just one company in this space, so we can't just analyze it in isolation. We need to look at some of its peers. What do we see with inventories with some of the peers of Microchip?
It's still a pretty ugly picture. The takeaway I get from this is these companies aren't completely out of the woods yet. Inventories that they have laying around are still very elevated from where they were during the chip shortage a couple of years ago, especially in 2022. That wasn't ever a healthy situation either. So don't look at this chart and think that days of inventory outstanding need to go all the way back down to where they were in 2022. I'll reiterate here, that was a chip shortage for the auto, industrial, and power market. So that wasn't healthy either. But the takeaway is the elevated inventories from the last year or two have also begun to drop from Microchip and friends. So Texas Instruments on here, STMicroelectronics, on Semiconductor, and Lattice, two other companies that we own in this market. And the trend is, generally speaking, all moving in the same direction. Microchip was the most egregious of these, with the really big increase in inventory on their balance sheet, weighing down on profitability. But all these companies had elevated inventory, and customer activity and paring back their fab activity has helped to mitigate this problem. So the trend could be your friend, as the saying goes. I kind of altered that a little bit, I guess. But things are moving in the right direction again. Good news here, and potential indicator that there is a lot of value in this area of the semiconductor market. And Casey, now this is not new news, is it? We've been talking about this now for the better part of a year. Walk us through some of the metrics that we started to see in calendar year 2025, about 10 months ago, especially when this end market bottom, in hindsight, actually occurred.
Microchip so kindly occasionally throws us a bone and gives us the book-to-bill ratio. Book-to-bill is the value of new orders divided by the value of completed customer orders. So greater than 1 equals a new growth cycle. Now, these are some of the book-to-bill ratios that were provided by Microchip in March: 1.07, greater than 1 in June, and then 1.06 in the September quarter. July ended up being the biggest bookings in 3 years. Not every company provides this metric, but with Microchip, it's a good indication that maybe they're ready for that growth cycle again. So what does this mean? Microchip has been relatively cheap, but recently had a bump after some price action after this announcement. But if you're looking for value in the semiconductor industry, it's always been in the auto, industrial, power market.
Especially for the last year or two. Maybe we should reiterate here one more time, we are not completely out of the woods yet. These companies still have a long ways to go to dig themselves out of the trough that they've been in, especially on a profitability standpoint. We would not at all be surprised to see some more mergers and acquisition activity if the financials continue to improve for these businesses. There is just still a lot of elevated activity and a lot of new competition, especially out of China in this area of the semiconductor industry. For example, Nexperia and some of that drama going on in the Netherlands with the owner of Nexperia, a company called Wingtech. Thank you. I was going to say Wingspan, but that's the board game that you like. But Casey, you mentioned patience being key. And if you're a value investor, you know that's always the case. Value investing requires patience. If you're looking for hot action, immediate returns, that's what momentum trades are for. And the AI and accelerated compute market is definitely where the momentum has been, and it appears continues to be in 2026. So patience is okay if this is your style, or if you need to mix in some other businesses, get some diversification in your portfolio. Patience is absolutely a fantastic quality, still very much relevant, even in the AI era, perhaps even more so than ever.
Agreed. This is just one company that we're looking at when we're talking about semiconductor companies that have some low valuations right now. There's many others that we discuss over on Semi Insider, and we have a new research platform to help you uncover companies that maybe you haven't heard of that you need in your portfolio.
And don't forget fiscal.ai/CSI to get an additional 15%. We should also mention Fiscal helps power some of the financial data over on our research platform as well. So check those items out. You can catch all of our research and the full write-up on this with a little bit more in-depth on what exactly makes a company like Microchip a value. Because if you're just simply using PE ratios, you're probably not seeing it. You're missing some information on how to assess a cyclical business. So we will see you over there to talk more about Microchip and the other auto, industrial, and power chip plays.
Thanks everybody for watching. See you again soon at Chip Stock Investor.